and November trend of FII outflows. Indian companies raised a record 1.21 lakh crore rupees through QIPs in the year 2024 and counting. India's coal production hits new highs in November while coal imports rise 4.2% from April to October. Four new IPOs are set to open this week, marking a strong finish to 2024's IPO frenzy. Markets continue an upward trend for the fourth week, boosted by hopes for repo rate cut and strong US economic data amid global focus on the Fed's December meeting slated to begin tomorrow. Dixon Technologies and Vivo India have forged a joint venture, with Dixon holding 51% stake, aiming to expand manufacturing reach for Vivo smartphones here in India. And Akasa Air pilots raise safety and training concerns, request investigation. The airline denies allegations of mismanagement. Joining me this Monday morning is Avinash Gorakshaka, Director Research, Profit Mart Securities. Good morning, Avinash. Thank you for joining us on News 9. Let me begin with the top story we are tracking today, and this as India's electric vehicle or EV industry accelerates. Two key government ministers have called for a shift away from reliance on subsidies. Speaking at a recent event, Union Commerce Minister Piyush Goyal and Union Minister for Road Transport and Highways Nitin Gadkari emphasized the need for the EV sector to build a competitive edge and become self-reliant. Goyal highlighted the success of initiatives like FAME 1, FAME 2 and the PLI schemes, but stressed the importance of moving beyond subsidies to ensure India's sustainable growth. Meanwhile, Gadkari echoed Goyal's sentiments, expressing that ongoing subsidies are not essential for the EV industry. Let's bring in Avinash here. Avinash, the EV sector in India hasn't really driven in the fast lane as it was expected to, and ICE cars continue to outsell in great numbers the EV cars. Withdrawal of subsidies, does it augur well for the EV sector?
Yeah, good morning, Karthik. I think you must understand that India is still a very new market as far as the electric vehicle market is concerned. I would believe that, if subsidies are withdrawn abruptly and all of them are not given to the manufacturers, then the scale of the opportunity is little difficult to be achieved, because today, as you rightly mentioned, the opportunity in the next 5 to 10 years is quite immense. I think people have understood the meaning of, environment, clean energy. But I think today, if you look at the prices of most of the electric vehicle cars, I think, the pricing has definitely been on the higher side, and that has been the key reason there has been some stiff resistance for the demand to catch up. So I believe that, subsidies have to be phased out, but they need to be phased out in a gradual manner, because the industry needs to be encouraged and the industry needs to scale up the volumes, which are yet quite small. So I think you don't see electric vehicles in rural markets or typically tier 2, tier 3 markets, because clearly unless volumes scale up and the opportunity to increase volumes goes up, then only the pricing per unit is going to come down, which most of the IC vehicles already enjoy. So I think, they are going to coexist. But obviously, the subsidy element will be important. So I think, the government may be thinking of reducing subsidies gradually, but any abrupt ending to the subsidy element would actually create a little bit of problems for new investment to come here.
New investment will, you're saying, be reliant at least on a gradual phase out of subsidies and not really abruptly cutting the subsidies. But keeping that in mind, Avinash, which are the stocks in focus for you from a long-term Indian auto sector story? Should we be bullish on, let's say, stocks like Tata Motors? Because that definitely seems to have the edge right now when it comes to electric vehicles, whereas companies like Maruti Suzuki, for example, have been laggards in the adoption of the EV story. How do you see the long-term view of India's auto sector, and which specific companies should investors keep their eyes on?
I think Tata Motors definitely looks very interesting because within the electric vehicle market they have a reasonably large market share of almost 40%. The second company could be Mahindra and Mahindra, which clearly has mentioned that by 2027 they are looking at 30 to 40% of their volumes coming from the electric vehicle segment. So I think both these companies have invested a lot of money. They have created a solid product portfolio of electric vehicle cars. And I think despite the fact that subsidies may get reduced in future, these companies are managed well, their cash flows are pretty strong. So they know the fact that in the longer term, this market is going to flourish. So I think investors should obviously use any dip in the market to look at accumulating Tata Motors and Mahindra.
Tata Motors and Mahindra companies to look out for, and buy on dip is the strategy coming in from Avinash. Avinash, I want to just spend a little more on the electric vehicle industry globally, and we've seen that that even in the US or other countries in the developed market, there is this debate between hybrid and electric. Now, hybrid is something which actually does not feature much of a mention in the union ministers when they talk about India's energy efficiency and reduction of oil imports, and the focus is totally on EV. Is hybrid also an approach that you think India would be taking, and better now than later before all the investments in electric are made?
No, I think the hybrid option definitely will be considered by electric vehicle manufacturers because this gives a fair amount of flexibility to them. And I think as I mentioned earlier in my quote that the IC and the typically the electric vehicle market is going to coexist together. It doesn't mean that if electric vehicle comes, the IC vehicles are going to completely go out of extension. My sense is that both will coexist, and therefore the emergence of hybrid will slowly take off in India. But I think for that also the industry requires a little bit of incentives, a little bit of concessions initially, because the scale and volume compared to other countries like China or US in India is extremely minuscule and very small. So I think volumes need to go up. I think over the next 5 to 10 years, hopefully once infrastructure is provided, more power facilities, specifically the charging facilities are provided, we may not see the volume growth significant. Only in metros and premier kind of locations electric vehicle numbers are going up, but we don't see the same happening in rural markets. So I think the point is initially some benefits and some concessions need to be given to manufacturers to incentivize this this sector.
All right, well, some incentives should be given to the manufacturing sector. Stay with us, Avinash, as we move to the next story this morning, and all eyes now turn to the critical domestic indicators with November's WPI or wholesale price index inflation data. For December's flash figures for manufacturing and services PMI are set to guide the mood. Now, last month's WPI inflation saw a jump to a 4-month high of 2.36%, driven, of course, by soaring food prices, particularly vegetables, making today's numbers even more crucial in gauging India's economic momentum. Avinash, WPI numbers expected today. What is the mood on the markets, and how do you expect the data to really come out, and what it is going to tell us about the state of India's economy?
I think my sense is that inflation numbers which were slightly elevated in the previous month. This month, we could see a little bit of moderation. And I think the markets are obviously quite positive considering the fact that, whatever commentary comes in the Fed policy this time, I think markets will be obviously be looking at what the Fed governor does. Already the markets in US are factoring in a 25 basis cut. And the commentary there is going to be very important. Whether the Fed thinks of going for another 2 or 3 rate cuts is going to be very important. But I think after that, possibly the RBI governor here could take a cue, looking at the data points as he mentioned in this last policy, that inflation is very important. And now with the new governor coming in, I think most of them are looking forward that some good news would come in over the next, say, 3 to 4 months. So I think, these numbers are important, but I think there is some light at the end of the tunnel. We could see little moderation in food inflation, and that I think is a very good signal for the markets, because that clearly means that interest rates could get cut, which has been a very long awaited demand from the industry.
Okay, so yeah, you're right. In fact, Avinash, you're joining a bunch of people who are expecting a rate cut in India to finally kick off. And the next RBI MPC, which is slated to be in the month of February, is actually going to be completion of 2 years since we've seen elevated rates. But you mentioned the US Fed and you mentioned the FOMC, which is slated to start tomorrow. Now, many industry watchers out there are saying that there isn't going to be as much to read in the rate cut in the US, and that pretty much is expected. But it's the Fed commentary which is likely to drive the mood of the market. Can you help our viewers understand what is the difference? I mean, a rate cut is a rate cut, great, but what else should they expect from the commentary of Jerome Powell when he announces the Fed's decision to cut or not cut rates?
No, I think my guess is, the bigger point to understand and analyze the Fed commentary is that what is the thought process from the government to ensure that, rate cuts are sustainable. I think if there are more than 2 rate cuts which are expected in 2025, then I think the markets could look at this as a kind of a very big positive surprise, because, whenever interest rates are cut, that helps the industries for boosting their profitability. And obviously that helps to, increase earnings growth. So I think, this is one crucial element which I think markets could see and would like to hear from Mr. Powell. I think the rate cut of 25 basis points, according to market reports, is already discounted. But I think if at all there are 2 or more interest rate cuts announced with a clear assertiveness from the governor, then I think that would be something which I think is important. And that is what the commentary is likely to be more important than purely the rate cut. If the commentary is going to be, cautious and does not talk about any rate cuts going ahead, then I think the markets would obviously not look at this rate cut in any kind of positive way. So I think, this is the main difference. The event is important from the fact that what is going to come in future rather than what is going to be done, in the very near term.
Okay, and rate cut, no rate cut commentary notwithstanding, we've seen a bullish FII environment in the month of December. We have seen inflows coming into the Indian markets as opposed to net outflows for the month of October and November. In fact, staggering data coming in, Avinash, 22,766 crore rupees in the first 2 weeks of December as equity inflows in the Indian market. This also comes amid the sliding rupee. The INR versus the USD is pretty much at record lows. Now, is this again something to do with what is happening globally and the macroeconomic environment, where India continues to be a more positive, bullish economy to invest in by FIIs? Or are we just looking at expiry data and hence the markets have also seen the kind of swings and it's not really linked to the FII story?
No, I think clearly, FIs have been doing some value buying, and I think clearly this number is encouraging. I think we also need to understand that we need to, see a little more stability and consistency in these numbers. But one thing is very clear, that Indian markets cannot be ignored for long. And I think looking at the fact that, Q3 numbers, according to me, are going to be much better than Q2. And plus the kind of money which is coming in primary markets, you see a lot of FI allocations, now going towards key primary market offerings also. So I think this secondary market buying plus some money, coming in the primary markets by FIs is definitely going to continue. I think markets will give some time. But hopefully, when January starts, I think you could possibly see a lot of pre-em buying, ahead of the budget and ahead of key corporate, Q3 numbers. So I think all said and done, whatever negatives had to happen. I think there was some profit booking because valuations had shot up in a very small period of time. But today, I think it's going to be a stock-specific approach. So FIs are also very selective in putting money in sectors like capital goods, housing, real estate, cement, autos. So I think, they're looking at key sectors. And this is not a all-round based kind of buying rally which they are doing. So I think it's better to wait for a couple of months. I think post-March, April, we'll have better clarity. Once, the US President Donald Trump also takes over, I think we're going to see a lot of commentary coming in, which eventually should benefit India. And that, I think, should go a long way in encouraging FI flows to, India. Yeah.
Right. So, of course, let's shift focus, Avinash, for a bit from FIIs and look at the QIPs, the qualified institutional placements, which have also hit a historic milestone in the year 2024. And this has surpassed 1 lakh crore rupees for the first time in a calendar year. In fact, Indian companies have raised over 1,21,321 crore rupees through QIPs by November, and this is an increase from the 52,350 crore rupees. In fact, more than doubled as compared to the previous year. Now, according to some analysts, Avinash, the sharp increase showed market resilience, and this has been a key factor in driving growth as companies continue to garner capital through QIPs. How are you viewing this increase in QIP from the year ago period, and what does this really tell us about the mood of the markets right now?
No, I think the increase in QIP is definitely a positive sign. See, institutional funds, FIIs, mutual funds have been very active in the QIP market, largely because quality companies are issuing quality paper, and I think most of the companies which have raised QIP money are companies where the growth trajectory is very solid, the order book is very strong, and where the management commentary and the scalability of the business is very strong. So I think all these factors have made them attractive, and that is the reason I feel that equity as an asset class is going to do well. I think when large funds put money in QIPs, they normally take a 2 to 3 year view on any particular sector or company. So I think long-term money coming in the equity market is always a positive sign. It gives a lot of stability, and plus most of these corporates would benefit because rather than debt funding, if a company issues equity, I think clearly the cost of equity is expensive in the longer term, but I think it's better than funding any project by means of debt. So I think to that extent, it's a positive development. But I think, yes, the markets have also taken it in a very positive way. Despite the supply of new quality paper, the markets have been resilient. There has been no untoward, selling in these kind of companies or sectors, and shows that there's a huge appetite for the, paper from these FIs.
All right. Well, Avinash Gorakshakar, thank you so much for all your inputs this morning, right here on the morning brief at 9. Always a pleasure having you with us. Let's move on now to some other stories that are making news today. India's coal production has reached a major milestone in November this year with a total of 90.62 million tons produced, marking a 7.2% year-on-year increase from just 84.52 million tons in November 2023. This growth was further boosted by a raise in production from captive and other entities, which surged by almost 38%, reaching over 17 million tons compared to 12.44 million tons last year. Moving on, the IPO calendar. Of course, several new IPOs are set to open this week, marking a strong end to the year filled with much activity in Indian IPO street. 4 companies will be launching their initial public offerings, offering investors new opportunities as the year draws to a close. Which are these IPOs set to open this week? Well, first up is Mamta Machinery. The IPO opens on December 19th and will close on December 23rd. Next up, we've also got Trans Rail Lighting. The IPO opens again on December 19th and closes on the 23rd of December. Well, Sai Life Sciences, the company is now finally expected to list its shares on the bourses on December 18th, along with Vishal Megamart. The shares of the company are expected again to be listed on December 18th. So is the case with One MobiKwik Systems. Remember, MobiKwik IPO, which closed last week, is also set to list its shares on December the 18th. And finally, before we head into a break, this is a company that we will be discussing in detail, and the shares of this company and what your trading strategy should be, along with Akshay Bhagwat, who will join us. But the news is that Dixon Technologies and Vivo India have announced the signing of a binding term sheet for a proposed joint venture, marking a major partnership in India's electronics manufacturing sector. Under the terms, Dixon will hold a majority 51% stake in the JV, while Vivo India will hold 49%. Now, despite the collaboration, both companies will maintain their independence, as neither will hold stake in the other outside of the joint venture. This, of course, is going to ensure that the Vivo smartphones will get manufactured right here in India. Well, time for a short break. On the other side, we will be joined by Akshay Bhagwat to understand what are the stocks in news today and what should your trading strategy this Monday morning be. We'll also bring you the market mood as the market has just opened at 9:15 a.m. Stay tuned to Morning Brief at 9 right here on News 9 Live.
love. B6 Mahindra Electric Origin SUVs.
It's not the fiefdom of politicians. They owe it to the people.
Matter is now more about faith of the millions of devotees than just political slugfest.
Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Welcome back. You're watching Morning Brief at 9, and this is the segment where we get into the stocks that should be on your radar this Monday morning. Before that, let's just look at the mood of the markets as they opened just about 5 minutes back. Let's look at how Sensex, Nifty, the mid cap and the small cap are trading. Not too good. The Sensex 50, the Sensex 30 and Nifty 50 both down, in fact, more than about 0.1% each. Positive territory for the mid cap and the small cap sector. The good news is that the volatility, the India VIX is down about 4% or so this morning. Let's just look at the heat map of Nifty 50. Look at which are the sectors which are actually reeling under pressure today. If we can bring up the heat map here and let's look at what are the stocks and what are the sectors which are not doing too good. Well, a lot of red on your screen today. You've got the BFSI sector, HDFC Bank, ICICI Bank, SBI, all in the red. Some positive territory for Reliance and Coal India. Remember, we are talking about India's coal imports, which have reached milestone high. Mixed bag for the IT sector. TCS, Infosys are in red this morning, but better news coming from HCL Tech and Wipro. Auto sector not doing too well. M&M, Maruti, Tata Motors all in the red this morning, and so is the case with the FMCG pack barring ITC. The FMCG stocks on Nifty 50 continue to be trading in the red this morning. We have Akshay Bhagwat joining us this morning, Vice President at JM Financial. Akshay, first up, what are you making of the mood of the market today? What are investors really in for this morning?
Good morning. Well, we had a strong bout of volatility on the prior trading session, and my belief is this was because of the weekly Sensex expiry. Because if you recollect, a couple of weeks back, even in Nifty, you had a similar kind of volatility on the weekly expiry day. So overall, if you see the broader setup of the market, it is more of a pullback rally, and the saving grace on Friday's trading session was that the level of 24,500 has been saved. The Nifty closed well above the mark of 24,500. Which is a positive short-term development for the market. So overall, my assessment is 24,800 to 850 is a short-term resistance zone. When this surpasses, you will have a momentum uptick right up till 25,100. For the coming week or for the next couple of days, there is a good chance that markets might be subdued in the range 24,400 to 24,800. This is the range expectation from my side. So overall, short-term subdued, but overall heading for 25,100. That's the view for the Nifty index.
Okay, 25,100 is the view for the Nifty 50. Let's talk stocks now. HUL share prices this year have undergone a sharp correction. Akshay, they're down about 600 points plus or 22% from the peak of 3,000. What do you make of HUL today? And is it a good time to enter the HUL stock if you don't already have that in your portfolio?
The last couple of months have not been good for the FMCG pack. I think a lot of results have gone against them, and there has been a lot of selling pressure in this particular sector. So if you look at the price setup of Hindustan Unilever, right now the indications are that this still is not out of the woods. There might be one more low in the making before you can call it any bottom for the stock. So if I were to look at from a technical parlance, roughly the area of 22 2250 to 2300 is my rough expectation that this is the level where support would be made in Hindustan Unilever. Right now we are at 2380 odd level, so still maybe 40-50 points more to go, after which you can expect some reversal. So if you have a buy trade, then probably if you're open to averaging, wait a bit for levels near 2300. Stop losses should be below 2200 on any buy bets, and I'm expecting a first leg of downside. After that, some kind of support and recovery can be anticipated.
Okay, so the stock hasn't bottomed out yet. Another 50 points or so correction is expected. That's the word coming in from Akshay. Akshay, tell us about the resistance for this stock. For those who are already invested, what would be a good time to exit the stock? Or should this stock not be exited and held for the long term?
From a long-term perspective, things would be different. We are right now looking at a monthly perspective where the resistance area roughly is working out to somewhere around 2450. So maybe if that dip which I speak of does not happen and you have some bit of a recovery before, then 2450, 2470 roughly is the level where you should take an exit if your view is from a 1 to 1.5 month perspective. Long term things would be different because long term the price structure is in a range. It may take a lot of time for the stock to kind of show any rebound or get into a strong uptrend again. So my belief is next 2-3 months are going to be range bound. But if you want to micro time this trade, then probably you need to wait it out for 50-60 points of dip before you take a fresh buy entry.
All right, wait out on the stock is the word coming in. Next up, I want to shift your focus now, Akshay, to HDFC Bank, and this also has faced significant resistance in the 1790 to 1800 zone. What do you make of this stock this morning?
For intraday traders, it's going to be more of a range-bound session, but HDFC Bank is one stock which you need to have in your long-term portfolios. Even from a medium-term price perspective, the overall sense which I derive looking at the price structure is the prices are very healthy, the valuations are good, and even if you look at the short to medium-term price setup on the technical charts, there are good signals that probably the stock might be heading for levels of around 2000 from a short to medium-term perspective. So the view is right now for short term, it might be range bound. The range is 1840 to 1880. This is applicable if you are a weekly trader. If you are an intraday trader, it's going to be stuck in a range, probably plus minus 10 odd points from the level of 1860. But from a slightly medium to longer term perspective, hold for levels of 2000, 2050. That's the point where you can consider taking out some profits off the table.
Okay, Akshay, help us understand, do you think with the FOMC meeting slated to begin tomorrow, there is going to be perhaps a 25 basis point rate cut in the US? Is that likely to impact the BFSI sector? And how are the net interest margins likely to play out for banking stocks and particularly for, let's say, a bank like HDFC?
I don't think rate cut is happening. Yes, the meeting would have a sentimental impact on the market because then it will be read as to how the stance is from the FOMC going ahead, whether it is a hawkish stance or what are the things which are said and how they do see the coming months for the US economy. These things will be read very minutely and the sentiment will decide how to take things further. But my sense is that from a short to medium term perspective, banking stocks might be a bit subdued in a range. It's more of a range bound trading which I anticipate, not much of actionable at least for the short term. So for HDFC Bank, stay with the levels. It's going to be range bound for short term. 1880 plus is the point where the prices gain momentum. That's the breakout point for the stock, after which you might see levels of 2000 plus.
All right. Well, let's move on now, Akshay, if we may, to Reliance Industries. Again, down from its peak of almost 1600 levels earlier this year, now trading in the 1270 to 1300 rupee range. In fact, even this morning, Reliance seems to be down. It is it opened in the green. The stock now seems to be a bit in the red. 1270, 1300 rupees from the peak of 1600. What is the play on this stock expected to be?
Well, see, Reliance has been subdued in terms of the price action. Even on the news front, there has been not much of an actionable in this script. Was a bit overbought for comfort. That's the reason you're having some bit of a profit-taking spree, which we have noted in the last 3 to 4 trading weeks. Right now, it is in the process of forming a support. Yet we do not have any conclusive evidence on the price chart that a major medium to long-term support is in place. So, for the short to medium term, it might be volatile. It might stay in a range. The lower end of the range or the support band probably is around 1225. These levels were tested somewhere on 25th of November, from where you had a recovery till 1320. So that's the support which I look forward to, and any kind of recovery near 1330, 1340 levels would be sold into for short to medium term. So my sense is it's going to be range bound. Intraday to maybe for this week you might have a slight pullback from the current levels till the level of 1325. So that's more of a trading bet if one is keen from a short term perspective. Otherwise, my sense is Reliance might be range bound, and really there is no major trade working out at this point of time in this script.
Okay, no trade working out for intraday traders who are invested in the Reliance story. Let's shift focus now to Dixon Tech, a very interesting stock. In fact, look at the kind of increase that Dixon Tech has seen in its share price, Akshay. And now further news coming in of Dixon Tech entering into a JV with Vivo India to manufacture smartphones. In fact, the company has said that it aims for a 40% growth in top line over the next 4 years. Excellent momentum for the stock with all these news triggers coming in. Positive territory seems to be something which we see on the charts. How do you make of this stock technically, Akshay, this morning?
Well, absolutely. Dixon Tech has been on a roll. If you look at the journey of this stock right from 2023, the beginning of 2023, month on month, it's been a one-way move for this stock, and it continues to go stronger day by day. So at this point of time, yes, there is a news. IT pack is holding strong, and at this point of time, really investment or medium-term view would not work out, because from a risk-reward perspective, if you're putting your money on this stock at such highly overbought price charts, it's very risky, because even a small bout of profit booking can drag the top prices 3 to 4%. So it's more about catching the momentum. If you have the script, I think this stock might be headed for levels of 19,000, but that's more of a momentum capturing or a short-term move. Even if you're an intraday trader, then probably you can capitalize on the move where you can buy it at current rate with the stop loss around 18,050 odd levels, and probably 18,750 is where you book out in this bout of momentum. So it is more of a momentum rally for intraday traders. For short to medium term investors, I would recommend wait out a bit. It is highly overbought. Wait for a slight dip or a correction. Then things should stabilize for taking fresh entry in this stock.
Okay, and for those who are already invested, Akshay, maybe you mentioned it, I might have missed it, but for those who are invested, you're saying we wait for the 19,000 levels to exit, or do you think the resistance will come at about 19,000 rupees or so, and it makes sense to continue being invested in a Make in India electronics manufacturing story like Dixon?
Well, see, I believe the way this run-up has been, it's always prudent to take some profits off the table. So if you have really got mouth-watering levels for investment, you have invested probably last year or maybe 6 months before or even 3 months before, it's good time to take some profits off the table, considering the fabulous bull run which the stock has. So take half the money off the table. Probably a dip around 17,000 should settle down things. That's the level where you can look forward for fresh entry. Overall, 19,500 is the target projection where you might see some bit of profit booking in the stock. So in wake of overbought price conditions, at least take half the money off the table if you have got this stock at good entry points in the last 1 year's time frame.
All right. Well, let's move on to another Make in India story, a Mine in India story, and this is Vedanta. Well, Vedanta, the news trigger is that will decide on the next round of dividend payouts in its board meeting today. Remember, the company has already made dividend payments of 35 rupees per share this financial year. Akshay, this morning, how do you view Vedanta? Is that a stock which is on your radar from a technical perspective as well?
From a technical perspective, see, Vedanta is nearing a resistance zone. If you look at the price charts, probably somewhere around 30th of September, the levels where we currently trade were visited, and from there we have seen a sharp corrective dip right up till the levels of 440. So right now you have a revisit of the same levels which we saw the prior swing highs, and last 3 days there is some bit of resilience which we see on the price charts at the range of 520, 525. So clearly a resistance is in place. Some profits are being taken for short-term trading. That's evident looking at the price action near the resistance zone. So the suggestion is wait for fresh buying bets. This is a resistance zone. Let it a minimum take out at least 525. Then we will take a review. Ideally, my expectation is a slight dip around 490 or 500 should be good levels to take a re-entry in the stock on the buy side. So at this point, if you're holding the stock, your view is for short term. Work with a trailing stop loss of probably around 510. If not, it's more from an investment perspective, then the things are different, because right from a 1 year plus holding, really the target projections can be pretty high. So for long term, it's a hold. For micro timing the stock, wait for dips of 490 to 500. That's the view in Vedanta.
Okay, so 490 odd levels to enter the stock and hold from the long-term perspective. Akshay, I want to quickly shift your focus now to another very interesting development over the weekend, and this comes in the startup category, and I want to eventually come to stocks of Zomato and Swiggy. But in a LinkedIn post, startup Bombay Shaving Company CEO Shantanu Deshpande has in fact condemned India's growing addiction to quick food delivery, and it has called out ultra processed foods packaged with high doses of sugar and palm oil. Now, of course, this is one startup, an unlisted one, really taking a dig at companies which are now listed and are in the quick commerce and quick food delivery space. I want to understand from you Zomato and Swiggy. Let's begin with Zomato first, Akshay. Now, again, there has been a bit of volatility on the Zomato stock. How do you view the Zomato stock and the Zomato story, given the slew of announcements which are being made, given the slew of new initiatives that Zomato has now really, come out with, and of course the entire ticketing business and all the concert tickets going on Zomato Live? How do you view the Zomato stock?
Well, for Zomato, look, Swiggy and Zomato, these were the two stocks. I think they have been included in the futures and options space, and there were around 45 new entrants from 29th of November in the futures and options space. From that day onwards, you have seen a short momentum-based rally in most of these stocks in the last few trading sessions. And if I were to look just at the price chart of Zomato as it stands right now, there is some bit of resilience or profit booking which is evident around the levels of 300. So this is more short-term, and the price setup makes me believe that if you are a short-term trader with a time horizon of let's say 10 to 15 trading sessions, the stock may be in a range. The lower end of the range is 275, higher end of the range is around 325. So yes, it is, the price structure is still strong, but it won't be a one-way rally as the stock has witnessed in the last few months. There will be interruptions and there will be roadblocks in between. So overall, my target projection is 325 if you are short to medium term. From a longer term perspective, yes, it's still a hold. There is no signs of any capitulation or any kind of a major reversal. So 245 to 50 is a long term support and be invested. That's the view in Zomato. Moving on to Swiggy, which is the other stock you mentioned. So Swiggy, I think this is more of a new listing. The data for me is a bit limited here, but whatever limited data points I have, the price structure is shaping up well, is starting to take a strong uptrend, and probably 580, 595 is the short to medium term target projection I can make with the limited set of data I have.
All right. Well, another important piece of news that came in this morning, Akshay, was, in fact, over the weekend, was India's record coal production and the whole energy story. Now, are there certain stocks that you have in mind for India's energy sector, which one should keep on the radar, given that the energy space has actually seen a sort of mixed opening this morning? The only positive territory seems in the Nifty 50 pack seems to be coming from Reliance, whereas ONGC, Coal India are in the negative. So any view on the energy space, especially a stock like Coal India?
Well, for Coal India, see the outlook is slightly on a negative side, because if you look at the price action, it's been rather muted since the last few days. It's trading around a support, but really the volumes are not picking up much. The support which I mentioned is somewhere around 400. Volumes are dull. Delivery-based action is low. Today, yes, there is some news about the Indian Energy Pack, but really that too is not making its presence felt in the pack as such. So I believe if you have this stock, then keep a stop loss of around 390 and continue to hold. But there is no fresh trade recommendation. At least the minimum buy point is let some momentum pick up, let 420-25 levels breach. That would draw fresh demand in the stock. That would be the buying trigger on basis of the price chart. So right now it's more of an avoid. If you are holding it, keep a stop loss of 390. If momentum returns above 420, 450, 470 targets would be in the making.
All right, 470, 480 would be the target. Akshay, thank you so much for joining us this morning with all the updates on all the stocks that happen to be in the news today and helping our viewers understand what their trading strategy should be. Well, before we come into a break, let's just look at how markets are holding this morning. You've got at 9:40 a.m. this morning a further slide for both Nifty 50 and Sensex. They started about 0.1% down, now down about 0.3%. Remember, this comes after the highs that it saw on Friday's trading session. Nifty mid cap and Nifty small cap holding well. So that's the mood at 9:40 a.m. We will head into a short break, but before that, let's just look at all the global headlines which are important and making news today. Well, 100,000 seems to be history for Bitcoin, as Bitcoin has now powered above $105,000 a piece. So a new record high for Bitcoin, trading at $105,000 for just one coin. And like we mentioned, all eyes are going to be on the US Central Bank as the interest-setting Federal Open Market Committee or FOMC meeting is slated to begin tomorrow. We'll also bring you on the other segment, what else is the US business and economy up to this week. There is going to be a business look ahead coming your way in the next segment. And the UK's economic health is deteriorating, back-to-back declines since the 2020 COVID-19 pandemic. What's going on in the UK? We'll bring you that update. And South Korea, after a presidential impeachment, well, the acting president is now trying to pacify its allies. Thousands feared dead around Mozambique in the wake of the cyclone that hit the Madagascar Sea's French island, Mayotte. And on the social media front, after US lower courts had banned TikTok, TikTok had requested for an appeal on that ban, and pending its decision had appealed and is looking at appealing against the ban in the Supreme Court, but the lower courts in the US have said nothing doing. The ban is here to stay.
XEV9e, Mahindra Electric Origin SUVs.
Prime Minister Narendra Modi became the first Indian Prime Minister in over 41 years to visit Austria.
The visit of Prime Minister Modi to Vienna this July was hugely important. The Migration and Mobility Agreement that entered into force in September 23, for us a very important step in our bilateral relationship. India has a very crucial role to play. Our relationship had really intensified.
So how is this cultural connect shaping?
A long tradition of Sanskrit studies in Austria, at Vienna University, in fact, since 1845. There have been Sanskrit studies at the University of Vienna.
Welcome back. You're with Morning Brief at 9. Let's shift focus to all the major global stories in news today. Let's start with Bitcoin. In a major development for the world's largest cryptocurrency, Bitcoin surged over 3% in early Asian trade today, hitting a record high above 1,05,000 US dollars. This comes as the cryptocurrency continues to gain traction since Republican President nominate Donald Trump has been elected to be the next US president. Well, Bitcoin reached a high of $142 and is currently trading a little low at $104,760 US dollars a piece, up 3.3%. Bitcoin rose above 1 lakh or 100,000 US dollars for the first time on December 5th as the election of Republican Donald Trump as president of the United States spurred expectations that his administration will create a friendly regulatory environment for cryptocurrencies. And from the US Federal Reserve's anticipated rate cut, which is likely to happen in the FOMC, which is going to begin tomorrow, to a health check on global services sectors and the Bank of Japan's policy pendulum swinging widely ahead of its own December 19th decision. Traders and markets are bracing for a roller coaster ride. Let's take a look at what to expect in the business this week.
From a potential third straight rate cut from the US Fed to whether services sectors are on shaky ground, these are the stories to watch in business and finance in the coming week. The US Federal Reserve is expected to continue monetary easing with a 25 basis point rate cut on Wednesday. That would be its third straight reduction. Focus will be on Fed Chair Jerome Powell for any insight about his expectations for future easing. The pendulum of Bank of Japan policy expectations has swung widely in the last 2 weeks, tying traders in knots ahead of a December 19th rate decision. One mooted risk is that the Fed surprises by cutting rates the day before, but analysts note it would be very rare for the Fed to go against the grain when market conviction for a cut is so strong. Traders expect the Bank of England to hold rates at 4.75% on Thursday. Employer tax hikes in the Labour government's October budget motivated big businesses to warn of price rises. That fueled inflation concerns and helped propel sterling to 2.5-year highs against the euro. UK employment growth is slowing as tax rises deter hiring plans and consumer confidence is weak. Sterling bulls should watch out for the BOE shifting gears. Once robust services sectors across big economies are faltering, bringing a divergence with sluggish manufacturing activity to an end. That was the takeaway from November PMIs. December numbers out across the globe next week should show if the slowdown is getting deeper. Though for some observers, the PMI data paints too pessimistic a picture of underlying activity, with falling interest rates helping to bolster sentiment.
All right, let's stay on with the UK economy a little longer. Well, UK's economy contracted for a second straight month in October, marking the first back-to-back decline in output since the early days of the health crisis in 2020. This comes as the nation braces for the impact of the new government's first budget, adding to concerns about the economic outlook. Take a look.
Britain's economy shrank for a second month in October in the run-up to the new government's first budget. That's the first back-to-back fall in output since the onset of the global health crisis in 2020. Data shows gross domestic product shrank 0.1% month-on-month in October, as it did in September. Economists polled by Reuters had forecast a monthly expansion of 0.1%. The services sector flatlined, and output in manufacturing and construction industries declined in October. It adds to a run of worse than expected figures for Britain's economy. Business surveys and retail sales are also falling flat. The country's finance minister, Rachel Reeves, says the focus is on policies to deliver long-term economic growth. Her budget statement in October imposed large tax rises on businesses, but raised investment and spending on public services. Last month, the Bank of England trimmed its annual growth forecast for this year to 1% from 1.25%, but it's predicted a stronger 2025. It expects growth of 1.5%, reflecting a short-term boost to the economy from Reeves's big spending budget plans. Britain's economic output has grown slowly since the global health crisis. Only Germany, which was hit hard by surging energy costs after Russia's invasion of Ukraine, has done notably worse among the largest advanced economies.
All right, moving back to the US, a US appeals court has rejected TikTok's emergency bid to block a law that forces its Chinese parent company ByteDance to divest from the app by Jan 19th or face a potential ban. With the ruling, TikTok now faces a race to the Supreme Court to halt the law, which could shut down the popular app used by over 170 million Americans. The law also grants the US government sweeping powers to target other foreign-owned apps that pose data security concerns in the US. And away from business, tragedy has struck the French island of Mayotte, where Cyclone Chido has reportedly claimed the lives of several hundred, possibly even thousands of people. A senior local French official confirmed the devastating toll as rescue efforts continue in the aftermath of the storm.
Video released on Sunday by the French gendarmerie showed the wreckage of hundreds of makeshift houses after the most powerful cyclone in nearly a century struck the archipelago of Mayotte in the Indian Ocean. A top local official told a local outlet that several hundred, maybe even thousands, may have been killed by Cyclone Chido. Asked about the death toll of several hundred, the French Interior Ministry said, quote, "It will be difficult to account for all victims," and said a figure could not be determined at this stage. Cyclone Chido swept through Mayotte overnight, according to the French Meteorological Administration. The forecaster said the storm brought winds of more than 124 miles per hour and damaged makeshift housing, government buildings, and a hospital, adding it was the strongest storm in more than 90 years to hit the islands. Mayotte's islands have been a focal point for illegal immigration from nearby Comoros. In recent decades, thousands have attempted to cross from Comoros on the east coast of Africa to Mayotte, which has a higher standard of living and access to the French welfare system. According to the French Interior Ministry, over 100,000 undocumented migrants live in Mayotte. Some 77% of the people in Mayotte live below the French poverty line. The cyclone went on to hit northern Mozambique on Sunday.
Well, that's all we have on Morning Brief at 9. News and updates will continue right here on News 9 Live. Stay tuned. Thanks for watching.
Come January 1st, 2025, and Australia will begin to tax international platforms and search engines unless they share revenues with Australian news organizations. On 20th November this year, the country had also approved a ban on social media for children under 16 years of age. With these two big decisions, Australia has been leading the fight against technology for quite some time now. Why is Australia taxing global digital platforms that don't pay for news? News 9 Plus decodes. Stephen Jones, Australia's Assistant Treasurer, says that digital platforms receive huge financial benefits from Australia and they have a social and economic responsibility to contribute to Australians' access to quality journalism. The big decision is in response to Meta announcing that it would not renew 3-year deals to pay Australian news publishers for their content. The tax would be levied on tech companies earning more than 250 million Australian dollars annually. The platforms to be charged include Meta, Google, Alphabet and ByteDance. The tax would be levied unless they agree to share revenue with the country's new organizations. The size of the tax is not clear yet. How have tech majors responded to the announcement? The global tech giants, as expected, are against this. A Meta spokesperson said that the current law is flawed and that the company has concerns about charging one industry to subsidize another. On similar lines, Google said that it had already inked deals with more than 80 Australian news companies since 2021 and was committed to renew those deals till this announcement came. Now, they are not so sure. Which other Australian tech verdicts have made global impact? On 28th November, Australia's House of Representatives passed a bill to approve a ban on social media for children below 16 years of age. Prime Minister Anthony Albanese's government secured bipartisan support for the ban. This decision has set a benchmark for jurisdictions around the world by being one of the harshest regulations on big tech companies. In the early months of 2021, the Australian government had a standoff with major tech giants to make them pay news outlets for the content they display. Google threatened Australia, saying that the country could lose access to the search engine, and Facebook featured no news for days. Eventually, Google and Facebook struck a deal with news organizations to pay for the content they display on their sites. The law was formally passed on 2nd March 2021, making tech platforms negotiate a price to pay news publishers for their content. Many countries like US, New Zealand call for the same. In 2022, the Australian legal system addressed the question of whether AI or artificial intelligence can be a creator and subsequently attain patents for said creations in the case of Thaler versus Commissioner of Patents. The bench had ruled that only a natural person can be an inventor.
India's neighborhood has been in turbulence all throughout.
Sheikh Hasina was forced to resign and take refuge in India.
Myanmar itself is facing an enormous internal crisis of sorts.
Periods of India's greatest strength was when the neighborhood did not have a problem with it.
There are events that are larger than your ability to control them. What you have to do is to make the best of those events and move forward.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Thanks for staying with us. You're watching News 9. I'm Piyush Goyal. A lot's lined up on this edition of Newscast. First, let's begin this bulletin with the top headlines. Tabla maestro Zakir Hussain passes away at 73 in San Francisco due to pulmonary fibrosis. Rajya Sabha to begin two-day Constitution Day debate today, cancelling the normal business of the House. Telugu actor Mohan Babu booked for attempt to murder after assaulting a TV9 reporter last week, visits the reporter in hospital to personally apologize to him and his family. Farmers to hold tractor march outside Punjab today, followed by a rail roko in Punjab on December 18th. After some students at a private coaching center in Jaipur faint, several others staged a protest demanding the institute to be sealed and a proper investigation into the incident. Is chanting Jai Shri Ram in mosque an offence? SC to hear a petition challenging Karnataka High Court's decision to quash criminal proceedings against miscreants who raised slogans inside a mosque. State BJP President B.Y. Vijendra dismisses allegations of attempt to bribe Anwar Manipedi to hush up a report on Waqf encroachment during BJP's rule. Heavy rainfall causes widespread flooding in several parts of Tamil Nadu, including Tuticorin and surrounding areas, leading to waterlogging. India beats China in Women's Hockey Junior Asia Cup 2024 finals. Well, top focus at this hour comes from the state of Kerala, where a physical test program that has become a popular part in parts of Kerala has now become a bone of contention in the state. This after a CPIM leader alleged that Jamaat-e-Islami and the SDPI, which is a political wing of the banned outfit Popular Front of India, were using the platform to further their political agenda. Even as the BJP lashed onto the comments to target the Pinarayi Vijayan government, a Congress MP and left allies defended the fitness initiative, and the CPIM leader who triggered the row, P. Mohanan, softened his position on this very issue on 15th.